There's nothing worse than a sustained trading drawdown. You get into a P&L hole and suddenly it starts spiraling down and you can't get out of it. You start losing more money, you feel more anxious, you're overstressed, and you start to doubt yourself and your abilities as a trader. It's a true crisis of confidence. And believe me, I've been through it many times in my career before I became the #1 trader at a tier 1 prop firm. But how did I rise to the top? Well, it was in big part to knowing how to stop the bleeding when in a P&L hole and having an exact, structured method for digging myself out and getting to profitability again instead of spiraling down into trading hell. In this video, I'm going to share the exact 10-step strategy with you that I was using in specific detail. Don't miss this one. Hi everyone, today I'm going to be presenting to you my drawdown best practices. You can follow me for more trading info at the1lanceb on Twitter. So first of all, I know your pain. I used to so painfully feel my losses. Big losses would ruin my day and often even my weeks. I would ruminate over them again and again. I can't stress this enough, but in my first year of trading, I had 0 positive months. I struggled day in, day out, working my butt off to see none of the reward. So I had to learn how to make it through these holes and make it through these tough times. I had to learn how to rebuild my psychology. And even during the rest of my career, I was a home run hitter. I was not the person that was making money every single day consistently. I would have some decent runs, but I would swing the bat hard. And sometimes that entailed also striking out. So trust me when I say I know the doubt, the pain, and the suffering of being in a P&L hole. These holes, they attack our identity of who we are. We begin to doubt ourselves, our strategies, and our future as a trader. Will we ever get out of this hole, or how long will it take? And I know what it's like, and that's why it's so important to have this plan. Nobody wants to live with the pain of failure, and managing drawdowns is an essential skill to survive and have a career as a trader. So let's get to it. Step 0, stresses are real. Don't let others minimize your pain. Losses can be truly traumatic events and put you in irregular or dangerous states of mind. So first of all, log out when you need to. If you need professional help, seek it. There's no shame. I use a trading psychologist and so do many others. So the following steps presume that you're already on firm footing and you've got your psychology at least somewhat on ground to work with. So step 1, regain perspective. First of all, we must always remember that by definition, losing in P&L holes are part of being a trader. Accept it, even though it doesn't necessarily make it any easier at the time. And so this is true for every competitive athlete, whether you're a poker player or you're a trader, and no matter how good you are, there will be slumps, there will be drawdowns, and this is something we need to learn to work through. One story that I like to remember is what my trainer tells me about one of his biggest losses at the time. He was growing and really blossoming as a trader, and then he took this massive loss in Google earnings. While I don't recall what the details were, I do recall what his dad's comments were to him. He called his dad on the phone and told him all about this loss and how it was to him seeming like the end of the world. And his dad said to him, he said, "Don't worry, may you only have bigger losses and more of them." Why did he say that? Because his dad recognized that this is what it takes to grow as a trader. If you ever want to have bigger and bigger wins, it comes hand in hand with bigger and bigger losses. And if you're going to have a long career, there's nothing but certainty that your losses will get only bigger as you grow. And also remember my bobblehead concept. We'll link this in the comments, but it's so important to keep this in mind as these losses are what make you better as a trader. They help you grow, they help you fix flaws in your trading, and they help you be better overall. As Trader NA here at SMB said, "This hole helped me learn so much about myself and stoicism, and I'm so much better for it." And I can promise you, when you emerge from the other side of this, you will be too. And so here are a few other tricks I use to keep perspective.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So first of all is the 24-hour rule. Olympian and Hall of Fame coach Dawn Faley, she would say after any win or loss, her team gets 24 hours to mope over it or celebrate. After that, it's back to work and focusing on the next challenge of how to get better. So after 24 hours, I accept the loss. There is no undo button in this game. Nothing will magically make the money come back. But worrying about it's inactionable. It's time to move on and do what we can to control it. Learn what you can, never think about it again, and build the habit of not allowing to yourself to ruminate or have negative self-talk. Solutions-focused thinking, only ahead. One other story I like to tell is the story of your worst day is my best day. I was trading and I took some massive loss in some biotech stock. I logged out, I was done for the day, past my loss limit, and as I was walking home, I saw a homeless person and he had the sign that said, "Your worst day is my best day." And I'll never forget that because that perspective was so important. Here I was, it felt like the end of the world. And I thought to myself, like, this day seems so bad. But for this man that's living on the streets without a home or without money or without the ability to feed himself, what would he give to be able to lose that money and still have a job at all? What would he give to be able to lose and take that loss but still have a home and still have support behind him? So whenever I have these bad days, I think about that moment and know that so many other people would give anything to be in that position with me. I recommend you keep a list of items that help keep you grounded. What are your personal reminders that remind you life is good for next time you take the loss? Have that at hand for the future. So step 2, with the little perspective on you, the next step is stop digging. It's so cliche, but it's so true. Depending on the severity of your hole, you might need to reduce your size, your lockout, or stop trading or take days off. I highly recommend you hard code these restrictions or set environmental constraints into your system so you can't succumb to FOMO or the whole must make it back in this fallacy. Those emotions can be very powerful. So the better you can protect yourself, whether with a risk manager or with a broker loss limit, the better it can be when programmed into that software. And you're then not allowed to trade again until you've learned the lessons from your loss. You need to deeply study it, think about it, and propose solutions. And then create an action plan to get out of the hole, which we'll get into. So step 3 is learn from the loss. The only bad loss is one you don't learn from. Your tuition has already been paid. You already took the loss, you can't undo it, so you might as well take the class and learn from it, right? So start to dissect the trade. You want to identify all the primary and secondary causes of the loss. By primary loss, it might mean maybe you didn't take your stop. Maybe you messed up an entry. Maybe you chased. Then what I mean by secondary cause is there something psychologically that could have led to that? Maybe you felt FOMO. Maybe you were on tilt. Maybe you were maybe you were poorly slept or something. So that's what I mean by the secondary causes. Then you want to propose thorough solutions and thorough fixes that might help you in the future. When possible, ask other traders for their thoughts and feedback on how they might have faced or resolved this issue as well. Step 4A is to set guardrails. It's so important to have these guardrails in place. Some people might take a loss and lose 100K, and that's an overwhelming amount for them. But you don't want to make that 100K, which might be very recoverable for you. You don't want to snowball it to 200K, 400K, or $1 million. So you need to ask yourself, what are you willing to lose from here? In what manner are you willing to lose that? And how much at a time? What will you do at each subsequent loss limit? And what is your hard max hole amount before you're going to take time off? Equally important is knowing when and how will you allow yourself to size back up. So often people might draw down into a hole and say lose 20K. They make it back to negative 15K and they think, oh, everything's fine. I'm going to just go back to my old size and old ways, only to plummet and fall back into the hole again. So to give you some concrete examples of these guardrails, this is what I mean. For sizing down, your rule might be at a 10K hole, I'm going to cut my daily stop 50% and create a drawdown playbook, which I'm going to get into. Then a subsequent rule might be if neg 3 days in a row or at negative 15K hole, if things get worse, you might even cut that stop to 75% of the original amount. You could even say something if another 3 days after that, Or a 20K hole, I'm going to take a mental break until clear-headed. Maybe that break will be a minimum of 3 trading days. Then 25K might be your hard maximum loss that you're willing to draw down. At that point, maybe you need to take extreme measures like hiring a trading psychologist or seeking help from a mentor or really taking some times away. Only then will you allow yourself to trade. And when you do, you must really reduce your size drastically, maybe even 95%, where your sole goal is just to hit a single and call it a day. So along with that, you want your rules for sizing back up. When is it safe for you to start to add back risk on? Maybe it's after being positive 3 days, you're reducing your hold to just 5K. Maybe then you'll allow yourself to increase your daily stop. Or maybe after being positive 5 days or back to flat, that's when you go back as well. And it's so important to have these rules so that you don't willy-nilly compound your issue or snowball further. So step 5, create a drawdown playbook. I can't stress enough how important this is. So many people get into these drawdowns, but they still might be taking low probability trades, or they still might not be adapting to what the market is now telling them. So what does a drawdown playbook do? It allows you to focus on singles only. You need to ask yourself, what are your highest probability trades, and what are you willing to risk in them? Similarly, what higher variance trades must you avoid? If you're in a hole and you're having trouble controlling your risk, you probably don't want to get stuck in stocks that are halting left and right and not allowing you to control that risk. You don't want to get into a lot of hard money that entails a lot of risk or frustration. All your review work should be directed on what is the easiest money each day. Forget expanding your playbook, forget tech improvement, forget all the little things. Your sole focus now is to obsessively find and hit the easiest singles along with do no damage each day. Now keep in mind, for most intraday traders, this also means no overnights. Most overnights open you up to overnight risk, news, and assortment of other things. They tend to be much higher variance than the traditional intraday playbook. So I urge you to reflect on what are the plays you should be involved in and what do you need to cut out during these times. Step 6, double down on the best practices. Bella says it best. Double down on your best practices that have led to your success in the past. What do you do well and what has helped you when you've been in past holes, or what has led to success? Focus on proper sleep, exercise, and diet, and most of all, no drinking. You need to be in the mental state of your absolute best. You need to be focused and ready to go. You don't want to make some dumb, careless mistake due to a lack of sleep that you're then going to regret because you snowballed yourself further. If some complacency led to your hole and you've stopped doing a daily report card, you need to go back and do that. So often we see people that step back, it's because of complacency, and they've stopped doing things like a daily report card. They've stopped reviewing where the easiest money is. They've stopped communicating with their team and doing the practices that led to their success. Step 7 is where it gets fun. Paint some green. Your sole goal is going to be to build that positive feedback loop, get that confidence back, and further cement your positive mental state. Each day, you're striving for singles and getting some green on the board. Easy money trades that smack you in the face and are the obvious money. Your goal is not to make the hole back tomorrow. Your goal is to move one step closer in mindset each day. Step 8, similar to that, is no steps backwards. There will be negative days, but just don't let your process falter. Stick with the daily report card. Stick with your daily review processes, and don't let complacency rear its head again as you're getting out of the hole. Big rips happen, but most sustained drawdowns I've seen tend to really be caused by people forgetting the practices that led them to success. And most of all, resist the urge to bet big to get out of the hole. This is faulty logic, because what's so dangerous is if you're missing something in the market, or if the market's changed and you haven't adapted, or if you're fighting trends, betting big when you haven't really identified these things will only tend to snowball you further. I see it all the time where traders think they just hit a bad run of luck, but the reality is they're fighting things, and betting big only compounds. Finally, baby steps. Now you're painting some green and building that positive feedback loop. One good best practice is to choose mini celebrations for various milestones. Make the hole bite-sized. Don't focus on the whole 100K hole, but think, how can I put up the first 5K or 10K? How can you just be green on the week or green 3 days in a row? Visualize each baby step and celebrate the small wins. And by celebrating the small wins, I mean healthy celebrations, not sleepless all-night alcohol binge type of celebrations there. And again, don't focus on that whole loss. That's when it can be really, really overwhelming. Focus on the bite-sized pieces and move the ball down the field. Each day, get a yard closer and improve your process as best as you can. There's a common paradox I like to say. It takes a long time to get out of holes quickly, but the quickest path out of a hole is slowly and carefully. And that remains so true to trading. So some final do's and don'ts for step 10. A lot of people fall for the trap of hopelessness where they say, but if I reduce my size to X, it'll take me 200 or 300 or 500 days to get out of this hole. But here's the thing. When you start to cut your size or cut your limits, that doesn't mean you're going to be on those limits forever. That doesn't mean you need to make it all back in the same one trade that you lost it in. Again, this is a long-term process to get you back on the road gradually and safely, right? So resist that urge to think, oh, it's going to take me X amount of days. Whatever it is, it is. The most important thing is you get out of it. And so also remember that P&L is a lagging measure of your changes. Just because you spent 6 months forgetting about your DRC and now you do it 1 or 2 nights in a row again, that doesn't mean the hole just goes away and you magically make the money back. P&L is this lagging measure, so you need to put the time in, then eventually the results come. One other thing I often hear is people reflect on what went wrong and they say, I was only trading high probability setups. I did nothing wrong. Most of the time that really isn't true. Math doesn't lie. If you're negative 5 days in a row, 10 days in a row, 15 days in a row, or 18 out of 20 days a month, and you're trading multiple trades a day, viewing them each as high probability, guess what? The math doesn't lie and it's not true. You are missing something. So often these periods of drawdown, people are either fighting the trend or not adapting. Begin your search with those each time. And remember, every hole gets easier. Once you've been out of one, you can remind yourself you've gotten out before and keep going back to that playbook. If you've been successful for any period of time, you have the ability in you to do so again. And finally, I'll leave you with this, my personal motto. Cherish the good times, there will be tough times ahead. Then push through the tough times because there will be good times ahead. This I promise you. You will be a better trader for this experience, even if it's hard to see at times. Every trader that's risen to the top knows this through their own periods of hard times. I want to end by saying that while knowing how to get out of a P&L hole is a must for every trader, you need to be consistently profitable to begin with if you ever want your account to be growing over time. In order to do that, you need to know the biggest secret to profitable trading. This is not what most people think it is. And in the video appearing on your screen, I go into the exact details of what that is and why it's so transformational for your trading. So make sure to give it a watch.